The crisis continues to unfold, but it depends on who you ask. I'm going to show you why the information that's out there has been hidden from you to keep you from knowing the truth. But that's why you're here. I'm going to bring you some data that will really highlight why we are actually in a devastating crisis that is affecting millions of people already. Here we go. Is it a recession or a rolling recession, or maybe no recession at all? You will see these articles over and over again, and quite frankly, we've been seeing them for a couple of years. And you look at some data, and it's going to show you that the economy is fantastic and resilient. But there's something else going on. Here we have it. Government's $50 billion loan program is coming due, but many businesses can't pay. This is out of Canada. Look, 250,000 businesses could risk closing their doors. Do you not think that that's a problem? What about this? This is the United States with around 45 million Americans holding student debt. Owing an average of $393 per month, US consumption could be impacted by a whopping $18 billion each month as they stop or as they start up with the student loan payments again. That was stopped. You didn't need to pay your student loans. But that's going to start up again, and people have to now pay $400 a month because the student loans are ridiculous in how much they cost. And you're going to have to pay $400 a month. Well, I have shown you countless cases where $200 to $400 a month are all people have left at the end of the month. So we are going to see extreme levels of debt as if we don't have enough already. Let me show you some more. As we look into it, you could see the US consumer is pulling back. After adjusting for inflation, US retail sales fell 3.3% over the last year, the seventh consecutive year-over-year decline, the longest streak since 2009. So you can actually see this when you factor in inflation and everything that has happened, it isn't looking good. When you look in dollar terms, oh, that's a whole different story. Why is that the case? Well, because everything is more expensive. You and I, we go to the shop and we go to buy something, it costs us more. So we are going to spend the $100. If I go get groceries today, I come back and I think, wow, for $100, I didn't really get too much. That's happening to everybody. You and I are experiencing that. It's going to determine what we are able to have, our disposable income, they like to call it. We have to understand, like, if we don't have disposable income, that doesn't go back into the economy. It doesn't create new jobs. It doesn't do these things because we have to spend on those necessities. And we can cut back here and there. We could make different choices. We choose the no-name brand versus choosing the name brand. Look, you're only going to be able to cut so much. And then you have an impact. I have seen in areas where there's commercial real estate that is suffering, those businesses are taking a hard hit. And do you think that the landlord is going to say, okay, we're just going to cut our price right here and then we'll get the renter in? No, they haven't been doing that. They haven't been doing that. Why is that the case? Part of that is because, by the way, they're going to be completely smashed because the debt that they owe is coming up due and they're in big trouble. But at the same time, if they cut it for one, what do you think is going to happen? You got somebody in a lease that's, let's say, was 3 years, 5 years, whatever the case is. That person was paying, will make up a number, $1,000 a month. And now you can only get somebody to rent that spot for $500 a month. What do you think that other person's going to do? They're going to say, I'm going to close up shop. I'm going to get out of here. I'm going to do whatever it takes to get out of this contract right now. They're all going to start complaining. They're all going to make a big deal about it because they say that guy's getting it for half the cost. I want it too. Make a deal with me. And that's going to start a chain reaction. So they're just saying, nope, I'm not going to move anywhere. I see very hot spots, A-grade locations that are empty and have been for a long period. That's not a good sign. What does that tell you about what's happening? Well, this is it. Morgan Stanley says commercial real estate will crash harder than during the great financial crisis. There are others, of course, that have their own opinions, but I wanted to show you here the consensus that the office sector is at most risk, given the widespread shift to working from home that emerged from the 2020 situation, which largely impacted demand. Now, some would say, it's not so bad. Bank of America is basically saying, yeah, not going to be an issue, all this thing. But I think if you have this issue of interest rates rising, you got to realize that there is, I believe, $1.4 trillion worth of this debt from commercial real estate that's coming up soon. When it comes up, it needs to be, it's not like a home, like you pay it off over 30 years. This is something that needs to be done very regularly. And when that does, 23 into 24, there are trillions of dollars worth of this debt that are going to be at a much higher interest rate. Commercial real estate working a little bit different than residential. Hard to know what they're paying on that interest rate, but we know it's going to be probably double what was before. So your expenses are going up considerably. And does that mean that the rents have doubled and that all of the expenses that people are paying have stayed low? No, everything has gone up. That's the crisis. That's the world we're living in right now. 23 into 2024. And so they would project this out to you and say there is a deflationary wave coming your direction. Some areas like commercial real estate could experience a deflation. In fact, I believe it was this article that was saying you will not have a return to normal until 2040. Somebody said that in here. I mean, just think about that. 2040. What does that do to the prices? What does that do to the businesses involved? Oh, they're going to be in big trouble, banks and so on. But I think for the response to that, if it starts to go and starts to snowball, oh, don't worry. They've got something ready for you, and that is a major inflationary wave. They're going to devalue your currency, so you don't have to worry just one bit, because they're going to inflate away. How do I know that they're going to inflate away? They've said it many times. Ben Bernanke said it. Alan Greenspan said it. Jerome Powell has said it. They will inflate your currency away. Low-income Britons can only afford 5% of rental homes. Did I just say that correctly? They can only afford 5% of private rental homes. IFS says 3-year housing benefits freeze is unsustainable. Affordable homes rarely meet the minimum social housing standards. This is going to happen all over the place. You cannot find places that are affordable where the jobs are close by. Yeah, I could find it in the middle of nowhere, in the middle of the woods, but where are the jobs? This is an article basically just talking about what's happening with inventory. They're talking about real estate in the US. And I think it's clear that the total sales have declined. And this has been a problem for, of course, real estate agents who did make big bucks in the years prior, but now they don't have those transactions. The transaction volume has declined. At the same time, there's more real estate agents than ever before. So they're fighting for their jobs in that respect. And I think that they are not too happy about what's going on in the real estate world as it is, because higher interest rates mean people are scared. So they're trying to do more selling at this point. And commercial real estate, they're not touching that with a 10-foot pole. Inflation in shops declines as UK battles cost of living crisis. Yes, food prices eases for the second month to 14.6%. You don't have to worry about costs at the stores, my friend. That's right, because according to these statistics that are obviously false, they're saying that the prices are coming down. It is a little bit funny, but actually quite sad. The banking crisis that's sparked by the collapse of 3 major US lenders in the spring may be out of headlines, but it's not over. And you can believe it or not, but the situation is worse today than it was a few months ago for the banking sector. Worse today. And this is talking about the Bank for International Settlements and what they say. And of course, we could point to a few things, which I will in a second, but understand that these are fundamentals. And no matter what NVIDIA stock is doing, you can't get around certain things. Your stocks are going to perform differently than the economy. And the stock market is always going to react first to information and last. Okay, because people get real excited. That's why during 2020, when we had a period of time in which nothing made sense, nobody knew what was going to happen. It was supposed to be 2 weeks long. Then they said, oh, wait, just a little bit more, a little bit more, a little bit more. The stock market didn't even wait for anything. It just started to rise like crazy. Peloton and other nonsense started to go up. So that started the trend in 2020. And then, of course, in October of 2022, markets started to rise really before there was a reason to do that, despite all the tightening and everything. So it's always going to react early. On the opposite end, the economy could be crashing, could be doing very badly, and the markets are going to react in a different way. Well, is it true? Is it not? And then you'll see some stocks starting to come down, and then eventually the whole index gets pulled down as everything comes down with it. So that's the difference, okay? Markets and economy, very important, and sadly, other YouTubers don't make that distinction. So this is for the Bank for International Settlements. There's an urgent change in mindset among the advanced economies now that the limits of the Keynesian-style expansion fueled by debt has been exhausted. The global economy is at a critical juncture. The key challenge is fully taming inflation, and the last mile is typically the hardest. Saying what we're dealing with right now is a problem. It is going to be an issue, and that the credit losses are going to be similar order of magnitude as the 2008 global financial crisis. People say I'm negative, people say I'm this and that, but I am quoting the Bank for International Settlements. The reports that they provide and the IMF provide are fantastic. I'll be honest with you. Their solutions and of course all the connections in with the CBDC and everything else, that's not a good thing. But I can highlight what they point out, and I could show you that, in fact, it's true. It's real. This is a problem. The bank, issue hadn't been resolved, and I talked about this more around those months there, and I think that this is something that is going to get worse before it gets better. But we can do things. We can actually do things and make change for ourselves. I'll talk more about that in a second. 4 job cuts hit contract workers, salaried employee layoffs to follow. KPMG to cut 5% of U.S. jobs in fresh round of layoffs. Illumina starts job cuts, plans office exits to rein in the cost. That's a very common thing, getting rid of the offices or reducing the total footprint. That has been very clear. Robinhood to cut some full-time jobs as trading demand eases. Less of the retail traders want to do this right now, I guess. But that's a whole different story. And by the way, I think it's imperative that you look into a company called Interactive Brokers. Interactive Brokers, I don't have an affiliation with them, though I should. The Interactive Brokers is a much better place to be trading than all these other places. All right, that's just straight up. That's just what I think. Interactive Brokers is really good. And they're operating most places, Canada, US, and so on. You got to understand that there are 2 things you got to do. You got to increase your income, but you also have to cut all the unnecessary expenses. And in this video right here, I talk about those expenses that you may have and what you can do. So click this video and I'll see you there.